Hello and thanks for checking out ChartGuys.com. We're proud to be one of the most successful technical analysis communities online, teaching you the skills to become a more confident, effective, and informed trader. Join our community of hundreds of analysts worldwide working together to learn the charts, generate profit, and achieve financial independence. For access to daily live chart analysis and market coverage, a thriving chat community, along with dozens of hours of exclusive educational materials. We look forward to seeing you. Let's check out some charts. Everyone checking in on the market. So right now, SPY is pretty much just patiently waiting for the FOMC on Wednesday, 2 p.m. Eastern. Last I checked, we had a 20% chance of cut rates this month, 68% chance of cut rates in July. So we'll see what the language is as to what kind of clues we can get from that looking forward. But this is the kind of environment where we don't really want to be day trading. We want to be sitting on our hands, and very patient and picky individual names that are breaking ranges can certainly provide some volatility, but we know the market as a whole is pretty low volume and tight. This is where we want to be aggressive as short-term traders, and this is where we want to sit back and patiently wait. So that is what I'm doing. It's still very, very healthy consolidation overall. The burden of proof is on the bears to knock the price down. 287.82 is going to be a key support level. That's the low of daily consolidation at this point. And if the bulls are able to get over 291.40, we're going to be looking up at the all-time high. So essentially, if we get a bullish reaction to the FOMC, all-time highs are in sight. And if it's a bearish reaction, we're going to look at a bit more prolonged consolidation, still looking for a higher low to be established, but that will open the door for more of an equilibrium as opposed to a continuation move. IWM bulls tried to show up today. Again, not really much going on there as well. The range that we're watching, we're pretty much fitting within the range from a week ago. And 6 days within this one candlestick's range of 150.58 support and 153.23 resistance, patiently waiting for a break on IWM. QQQ, same thing, sideways on the daily time frame, not a whole lot. Individual names have had some nice volatility. Facebook has been raging in breakout mode thanks to cryptocurrency hype. Bitcoin bulls have been very strong, and the fact that Facebook is jumping on that cryptocurrency train with more details coming out tomorrow, that's going to be very interesting, and the bulls are certainly responding well to it. We also had Netflix with the big bullish day today, but let's just get that comparison of Facebook. That's what Facebook has done since cryptocurrency was announced, that this week they'd be coming out with more details. 2 huge gap ups and a complete turnaround from the bearish dump in reaction to the Fed probe. XLF pulled back today. That's where the weakness in the market came from, and that's due to the FOMC approaching, and any kind of dovish talk or any kind of rate cut talk is going to be bearish for this sector. The question is, will we see sector rotation out of the financial sector and into other names? And if we do see rate cuts, that certainly is going to be the most likely scenario, in my opinion. But we've not found a daily high or low yet. We have our low of the dump, the high of the bounce, and now we're looking for a daily high or low to be established, and likely going to see a tightening range form on this daily time frame. XLV straight across, certainly still favoring the bulls here. We've had the range fit within the candlestick from 5 days ago, and we're either going to look for a bull break of 91.96 or a bear break of 90.90, and the healthcare sector certainly performing very well with this sideways bullish consolidation. Again, the burden of proof is on the bears, and the bears have not proven anything to us over the last 4 or 5 days. Biotech sector, huge bull day today, and a clear break from this choppy range. So we've been highlighting this choppy range and how there's been a lack of clarity. That's certainly not the case anymore. We're still going to be looking at the weekly chart to set a lower high compared to 93.87, but the bull break from this range certainly gives us more clarity. Anything above 80.65 will be a daily higher low, and we've got resistance up at 87.87, and that's the highest price we've seen in about 6 weeks, so it'll be notable if the bulls were able to get over that level on the XBI chart. VIX is still weak, not a whole lot going on here, but again, the burden of proof is on the bulls to see a move up as we're heading down to 1440 as support. And we've got resistance, 1980. We've got a short-term range that we're trading within. The lowest price that we've seen down here is 1520. So 1520 to 1670, we've been within that range for 8 days, but we're heading back down to the lows as we are fading as always, which is why there are people that just patiently wait for spikes in the volatility index, knowing that the way natural markets work is you get spikes in volatility, then you get equilibriums and tightening ranges, and it's when those tightening ranges occur that we see volatility significantly drop off and that's currently where we stand. The weekly chart, bulls need to hold 1440, otherwise we're fading back down towards the lows, as there's not a whole lot of volatility in this market currently, as those sideways trading ranges certainly show us. Oil, low of support, high of resistance. Bulls must see a move back up towards 54.80. The bears have the advantage at this point, as we're only about $1.30 above support, and we're currently about $3+ below resistance. So inventory report is Wednesday. It might require that to give us a break of this range, and if we cannot break 54.80, the bulls are not going to prove anything to us on the daily time frame, as the bears keep control. So burden of proof on the oil daily chart is on the bulls, but again, the market bulls, S&P 500, very pleased with how well they have held up in the face of weak oil. Only gives themselves good positioning for when the oil bulls do finally show up, as we have now been consolidating for over 2 months on oil, and we are still anticipating this monthly equilibrium, patiently waiting for a monthly higher low to form, but no sign of it yet. Natural gas bull break on the daily, but when we get trend changes with no follow through, we zoom out and look for the potential of a flag, and the weekly chart is currently a bear flag. So this daily higher low and higher high has no follow through, and if that remains the case for the rest of the week, we're going to be looking to head back down towards the recent lows. Resistance 2142, or make that 2412, and then a lack of clear resistance immediately after. And if we see a break of 2316, the odds of a bear flag will certainly increase from there. So overall, not doing a whole lot of trading this week, trading the USMJ sector, but that's more of an oversold bounce play, and patiently waiting for FOMC reaction. We'll expect a significant reaction in the dollar and in gold. The bull miners have been on fire, and the FOMC reaction is going to let us know if that's going to keep up or not. So we'll check back in, not expecting a whole lot the next day, but on Wednesday, we'll probably get a bit more of short-term clarity. So hope you're well, do good things out there, and we will see you tomorrow. So the most recent chapter of story time from this past weekend went on a camping trip with about 25-30 different people in Joyce Kilmer National Forest, or actually Joyce Kilmer Old Growth Forest inside a national forest. And it's just some of the biggest trees, untouched, old growth forest on the eastern coast. And the biggest trees are about 5 or 6 people hand in hand around the diameter. And a great place to camp with just undeveloped sites along rivers or lakes. And you can bring your canoes and inflatables. So we went out there with a bunch of people. I probably only knew half of them. But one thing this group is really good at doing is organizing and showing up and everybody doing their part. So we had maybe 3 canoes and a big whitewater raft and a bunch of floaties, and everybody brought food for the group. And we had, 3 people designated to cook dinner Saturday night and 4 people for breakfast Sunday morning. And we all eat as a group. And the food that we were eating, if you walked down from a fancy hotel and this was in the lobby, you'd be impressed. So I was very nourished all weekend, as we all were, and just doing the hangout, have fun, play around. One of the games we played, we were standing on either side of the whitewater raft, and there's a rope in between, and you all pull it. There's 2 people, and you pull it as fast as you can, and then once you get taut on the rope, you can't fall in or out, and it's a fun tug-of-war game and a lot of falling in the water. But that was great, and a lot of fireside drumming and music, some great musicians, some singers and banjo players and all that good stuff. Some kids and dogs were there. Pretty much the ideal camping weekend as far as I'm concerned. But it's the kind of thing where when I come back from that, it's really hard for me to care about trading and profits and candlesticks. So it takes me a few days to get back into the flow of things. And that's when I just pump the brakes. And I know that my mental state's a little bit different, and I'm not really focused and in the zone and in my routine. So the next couple days I scale back my trading, and it's much different than if I'm in the zone and in my routine and an opportunity presents itself and I get very aggressive. If I were to try and get very aggressive right now, it probably wouldn't end well. So I'll share some videos over the next couple of days from that, and then we'll get back in the routine. See you next time.
in the meantime, lay in the